Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Welcome to Saving with Silverman. I'm Ron Stutz, along with Mark Silverman, certified financial planner professional at Silverman & Associates in Tucson. Glad you decided to join us on today's show. And Mark, it is always good to be with you.
Ron, I'm always happy to be here, ready for another great show this week.
The number to call or text if you like to get in touch with Mark Silverman's office, and I'll go ahead and get this out of the way really quickly here. Go ahead and write it down or put it in your phone, whatever you need to do to remember it. 520-333-7601. That is 520-333-7601. You can call or text 520-333-7601. Of course, we talk about a lot of interesting things on this show, and Mark, today let's talk about types of risk. Lots of different types of risk. Most people, I think, consider risk to be market risk and really don't think much beyond that. There are a lot of other risks to guard against in retirement planning than most people realize. Explain how you address these particular kinds of risk in your planning process. How about market risk, first of all?
Well, sure. Market risk is simply the stock market, and different people look at different stock markets. A lot of people kind of gauge it by the Dow Jones, which is 30 industrial stocks. We think a better way to judge it is the S&P 500, which is the Standard & Poor's 500, which is the 500 largest companies. There's also the NASDAQ. Could be another way to look at the market, but the S&P is kind of a broader market to look at. But market risk, if the stock market goes up, typically your investments would go up. If the market goes down, your investments would go down. But, everybody needs some level of market risk. Everybody needs some level of growth. That, of course, that's going to depend on, where you are in retirement. If you're, a few years out or many years out, or if you're already retired, then maybe you don't need as much market risk. But everybody needs some type of growth to keep pace with inflation. So that's the important thing. But we can dial it up or down based on, your risk preference, your risk tolerance, as well as your goals and objectives, and making sure that those two are always on track.
There's also another kind of risk that most people don't really think about, and that is interest rate risk. How do you explain that?
Interest rate risk has to do with bonds, whether you hold those individually or through a mutual fund or exchange traded fund, what we call an ETF. That's what that's going to mean. So let's say the average interest rates are now at 3%. And let's say you buy a mutual fund or an ETF, and let's say now interest rates go down to 2%. So now your ETF that you hold is going to be worth more because of the fact that rates are now at 2%. Let's say the reverse is true. Let's say rates now have spiked to 4% and you bought that at 3%. Well, your bonds are going to be worth less because the market can get 4% while you're at 3%. So those are going to fluctuate based on interest rates. So it's important to understand that if you're buying bonds and holding them to maturity, it really doesn't matter, because at that maturity date, you're going to get the money that, assuming you bought it at the initial offering, you're going to get the money you put back into it, as well as the interest that you've received over that time period as well.
Still another type of risk that most people really are surprised by when you get into a discussion about it, and that is inflation risk. Most people don't really think too much about that either, do they?
They really don't. And, we're big on financial planning, for those of you that probably already know that. For some of you, you may not if you haven't listened to our show very much. But inflation risk is a big one. And so in our planning process, we use a 3% inflation rate. And what people don't realize, let's say they've determined that they need $60,000 a year in retirement. Well, that's in today's dollars. Each year we need to bump that 3% so they can keep up the same purchasing power. And a lot of people don't realize how much that is going to grow, because it's so important. If somebody's retired, say 20, 30, and in some cases we're seeing people who are retiring early, they may be retired, close to 40 years. That income needs to increase just to keep the purchasing power intact. And people, when they see the numbers on paper, they can't believe that that's only a 3% inflation rate, but in fact it is.
Mark Silverman's planning process is called the financial physical. It's just like going to the doctor on a regular basis for a checkup. You need to make sure that everything is all right in your portfolio, and Mark Silverman can certainly help you do that. If you should become a client, we'll give you the number again so you can get in touch in just a few moments here. We're talking about different types of risk on today's show. We've talked about market risk, interest rate risk, and inflation risk. How about tax rate risk?
Well, tax rate, we are, and I know a lot of people have noticed that tax rates have been going up the last several years. However, if you look relatively to where we have been historically, tax rates are still relatively low. And so why it's important is to understand that if you're paying certain taxes at this age, let's say you're in a certain tax bracket, as you get older and you get into retirement, we need to project what those tax rates are going to be in retirement, because the money that you're paying to taxes obviously is not money that you're going to be spending. It's money that's going to pay for taxes. And yes, you do still have to pay taxes even in retirement, unless your income is so low that you don't need to pay taxes. So it's important that we make sure that we understand where tax rates are now and make projections of where they might be in the future, so we can understand how much money you're going to have to spend versus pay taxes with.
Okay, and one more type of risk that I wanted to ask you about today, and this is longevity risk. Probably a little more difficult to get your head around this one, because there's so many uncertainties when it comes to your longevity.
And this is a big one too, and a lot of people are surprised. But through our planning process, we'll look at mortality tables, and I can tell you, a lot of times we're running plans. We're running plans at a minimum to people in their early to mid 90s, and in some cases we're running them to age 100. In fact, we have a case right now where we ran it out to age 105, and I think the other one we ran out was to 110, because there's a lot of longevity in the family. And here's what we do know: people are living longer. This generation is living longer than the last, and that trend's probably going to continue with all the new advances in medicine, et cetera. So it's important that you need to make sure that your money lasts longer than your life does. And so, longevity risk can be a big thing. If you're working with someone or you're projecting to run out of money at age 80 to age 85, and then you have more life and you're still alive when that time comes and you don't have any more money, obviously that's a big problem. So we want to make sure we're doing through our planning process, making sure that we're accounting for longevity.
Certainly having longevity in your family, and a lot of people, a lot of relatives or parents or whatever have lived to a long age. That's a good indication that you might do the same, unless something really bad happens. But that can be a negative thing too if you don't plan for it and you run out of money, and that's not the kind of retirement you want. A lot of people lying awake at night all night wondering about running out of their money and outliving it. And Mark, I know that there are a lot of people out there listening today who would like to come in and have a conversation with you, because you can keep that from happening for these folks. What do you have to offer when they walk in?
Sure, Ron. So whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your opportunity to come in and have a conversation with me in my office to go through this process we call the financial physical. I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we will discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This becomes the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We try our best to help everyone. However, our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. Call or text 520-333-7601. Mark Silverman, your certified financial planner professional, the founder and the managing member of Silverman & Associates, can be reached 520-333-7601. And again, you can call or text, whichever is easier for you, 520-333-7601. You're listening to Saving with Silverman. My name's Ron Stutz. I get a chance to hang out with Mark Silverman for a while here, and we'll be back with more in just a moment.
Have you ever heard that story about the grasshopper and the ant? You know, the one where the grasshopper fails to plan in the spring and almost starves to death in the winter? Learn from that. Don't wait until it's too late to get your finances in order. Start your path to a rewarding retirement today. Keep listening to Saving with Silverman.
Welcome back to Saving with Silverman. Ron Stutz here along with Mark Silverman. If you've ever wondered about Mark Silverman's website, it's savingwithsilverman.com. Great website address, savingwithsilverman.com. Easy to remember, savingwithsilverman.com. But again, the most important information I can give you right now is the phone number, because you can call this number and you can arrange to get on the calendar to come in and have a conversation with Mark Silverman in his office in Tucson. And Mark's number is 520-333-7601. 520-333-7601. You can call or send a text to that number, 520-333-7601. We've talked about some interesting things on today's show already, but let's talk about economic and demographic statistics. I know you're a numbers guy, Mark. I'm not much of a numbers guy myself, but let's get into the nitty-gritty here. Give us your initial gut reaction when you hear these statistics. What implications do they have for you and your clients? Number one, only 22% of people in their 50s describe themselves as very confident that they'll have enough money in retirement. Only 22%.
I'm surprised it's even that high.
Yeah.
I mean, I'm surprised how many people I've met with that I've been actually working with advisors for many decades that still have no clue at the end of the day if they have enough money to achieve all their goals, whether it be retirement or whatever it is that they're looking at doing. Because really what happens is they don't have a plan. Yeah, they might have investments that are managed maybe properly, or in some cases maybe not the best possible way, but they're managing their assets, but they don't really know, and they can't show them with a high level of predictability if they're going to be okay or not. And how do they know that if they haven't run a full financial plan that encompasses all their financial aspects of their life, including retirement and income sources and life expectancy? We talked about longevity, all these different factors that go into it to show, hey, you're on track or you're not on track. And if you're not on track, what can we do to get you on track? And so that number does not surprise me. And I've met with so many people over the years, especially lately, it seems. I've met with quite a few people who have had long relationships with their advisor, and they don't even have a comprehensive financial plan. So they don't know if, in fact, they're going to be okay or not. Their advisors might tell them that they are, but what is that based on?
Yeah. Well, here's one that'll really scare you if you really haven't thought about it, and it goes right along with the conversation we had about longevity a few minutes ago. The average 65-year-old woman has a life expectancy of 20 more years. You got to plan for retirement for so much longer than you used to.
Absolutely. And like I said, when we're running plans for people, unless there's some type of, terminal illness or something that we know about, in a lot of cases, we're running plans into the 90s almost always, unless there's some specific circumstance. And like I said earlier, in a lot of cases, we've run some cases even up to age 100 and beyond. So that doesn't surprise me at all. Through our planning process, again, we're running them into the 90s. So having somebody that's 65 running it for 20 years might not even be enough time. We need to probably run it for, 25 or 30 years in most cases.
We're talking about numbers and some statistics that are really quite shocking. Some of them, 13% of our country's population is now over the age of 65. That has some pretty strong implications, doesn't it?
And Ron, that number is probably going to continue to get bigger, that percentage, because people are certainly living longer, as we just said. And, with the advances in medical technology and those sorts of things, people are living longer. It doesn't mean they're always healthier, but they're staying alive longer. And so that requires costs, whether it be food or medical care or whatever it might be, nursing home, long-term care, those sorts of things. So, planning is so important because you don't want to be a burden either on your kids, grandkids, family members, whoever it might be. You want to make sure that you're going to be financially independent, which does require planning.
If you're over the age of 65, you might want to come in and have a conversation with Mark Silverman to make sure you're not going to outlive your money. 520-333-7601. Call or text 520-333-7601. We're talking about some economic and demographic statistics. Some of these numbers kind of scary, actually. Another statistic to throw at you here, Mark. 81% of retirees say that a retirement plan is very important. And just about all of us know how important it is, yet only 18% actually have a retirement plan.
Well, that's because most advisors that are out there aren't really advisors, they're salespeople. And that's the unfortunate thing. Most people are there just trying to sell people things. In fact, I was listening this past weekend, and I won't say which radio show, but they were talking about their, safe money strategies and this sort of thing. All they are doing is telling you to put all of your money into annuities. That's all they're doing is trying to sell you products, which, obviously you can tell from my tone, I don't think that's a great idea. I'm not saying you shouldn't maybe have some of your money in annuities and certain types of annuities, but certainly putting all of your money or most of your money into annuities is not a good idea. And having somebody just sell you something and telling you don't worry about the rest or go talk to somebody else about the rest, you need somebody that's going to look at all the different pieces of your puzzle. And getting back to your statement, Ron, the problem is most advisors don't have the capabilities. They're not CFPs. They don't have the abilities. They don't have the software, the training, or the experience to put financial plans together. All they're good at is selling, investment or insurance products. And if that's all you're looking for, which I believe is not what people are looking for, because at the end of the day, people want to know if they're going to be able to retire. They want somebody that's going to look at all the different pieces of their retirement puzzle and tell them, are you in good shape or are you not, rather than just sell them something and hope that it's going to work out. People want to know with a high level of predictability if that's the case or not. And that's why it's important, in my opinion, you work with a certified financial planner that's also a fiduciary that's going to look out for your best interest rather than somebody that's just trying to sell you something.
When you come in and have a conversation with Mark Silverman, it's not going to be a sales pitch. It's not going to be an opportunity for him to try and sell you some product that you don't necessarily want or need. It's a good opportunity to just sit down and learn a lot about your situation, and Mark's going to work with you. There's going to be no pressure whatsoever, and certainly there's no cost and no obligation when you come in. So, why not go ahead and take that step? And Mark, for the folks who make that phone call, what do you have to offer?
Well, Ron, just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? So whether you're a do-it-yourself or already working with someone, this is now your chance to go through this process we call the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you've always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. This is far different than basically every other radio show that you hear on this station as well as others. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who is actually required to have a fiduciary responsibility to look out for your best interest at all times. And I can tell you, if you're working with somebody at the bank or brokerage firm, wirehouse, an insurance salesperson, etc., they do not have a fiduciary responsibility to look out for your best interest. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson, and the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We try our best to help everyone. However, our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. Call or text, whichever you prefer. 520-333-7601. That is the number for your certified financial planner professional at Silverman & Associates, the one and only Mark Silverman. He's the founder and the managing member in Tucson. And again, that number is 520-333-7601. 520-333-7601. All you got to do is leave your contact information. A member of Mark's team will get back with you first part of the week, and then you'll be on your way to coming in and having a conversation, an information gathering session, if you will, with Mark Silverman. This is Saving with Silverman. Ron Sutz here along with Mark, and we'll have more coming up in just a moment.
Learn the path to a worry-free retirement. Keep listening to Saving with Silverman.
Thank you so much for listening to Saving with Silverman today. The star of the show is Mark Silverman, certified financial planner professional at Silverman and Associates. The website is savingwithsilverman.com, but the all-important phone number is 520-333-7601. That's 520-333-7601. Call or text. You can get the planning process called the Financial Physical. Mark Silverman, of course, a certified financial planner professional, the founder and the managing member of Silverman and Associates. And that number to call again is 520-333-7601. Call that number, or you can send a text if you're more comfortable doing that. Either way, you don't have to talk to anybody today. You don't have any numbers in front of you. You don't have to have all your information gathered. Just go ahead and call that number, and then you can get ahead of those folks who may call at the end of the show. It's time now for the request line. We get great questions every week. And Mark, we have a good one today from Ben in Vail. Ben says he wants to retire when he's 55, and that is 6 years away. So he's 49, I guess. What should he be doing for the next decade to put himself in a position to do that?
Well, Ben, that's a great question. You need to seek out the help of a professional. And what I mean by professional is somebody that's willing to give you advice, not a salesperson. So if you're working with a stockbroker or an insurance salesperson, any of those type of people, you need to speak, in my opinion, go to the CFP website. You know, I'm a CFP, but you can go to the CFP website, look for any certified financial planner, and have them put a plan together for you. And make sure they do it objectively, where they're not trying to just sell you something, but they're going to put a plan together for you that's going to analyze your whole situation and tell you if you're on track or not. And if not, what you need to do to get on track and that sort of thing. So it's a great question. Sometimes we recommend getting together even sooner, but I think you're right in a position where if you're only 6 years away, you need to make sure that you're doing everything proper so that doesn't become 10 years or anything like that. But great question. If you want to speak to us, we're happy to go through that process with you and show you how we would do it. But if not, again, seek out a certified financial planner that's willing to put a plan together for you to make sure you're doing everything you can that's going to work out for you.
So many factors to consider in this, and thank you so much for sending in the question, Ben. And good idea. Come in and have a conversation with Mark. Charles in Sarita is next with a question, and Charles says, employees at my company have the opportunity to buy shares of stock in the company at a significant discount. Is this something that I should take advantage of?
Well, Charles, are you a fan of the company you work for? Assuming that you are, which most people are, because they might not work for the company if they don't feel that they're financially stable. But, you know, typically when you do what's on an employee stock purchase plan, you typically do get a discount. Sometimes it could be, 10%. Sometimes we've even seen where they even get a significant discount. Sometimes those shares are restricted, which means you can't just buy them and sell them. You have to hold them for a certain time period. But it's a great way to invest if you have some extra money and you feel strongly about the company you work for, hopefully you should, then it could be a great deal. But that should be in addition to putting money away for your retirement. So if you have a 401k, et cetera, you should be putting money there too. But this is a great way to get some savings, and if you are getting a discount, so it's a great place to put some additional money away. Great way to save.
Okay, great question so far from Ben and Charles. And one more question today, Mark. You got time for one more?
Yep.
Margaret in Green Valley says, my husband wants to pay off either our house or our rental property just so that we'll have something paid off. We have enough in our money market account to pay off one of them, but I prefer seeing a lot of money in that account just in case we need it for something. Who's right? You want to jump into the middle of this?
Well, Margaret, I don't know the rates that you're paying, but typically the rates on a rental are higher interest rates than they would be on your primary mortgage. So with that being said, let's say you're paying 5% on the rental and 3% on your primary residence, then you'd probably want to pay off the 5%, which is the rental property, because you're paying higher interest on that. And then, of course, you are going to probably get a mortgage deduction with your primary residence too. So we can make the argument of whether it makes sense to keep that mortgage or not. I don't know if you have the money to do both. It didn't sound like you did. But, typically you want to pay off the rental first. And if you're keeping that property, then it's more cash flow that you're going to be getting for retirement. But certainly something we can investigate with more details if that's something that you're interested in. Certainly reach out to us and we can talk to you and give you some more advice based on more information.
Well, good questions today from Margaret and Charles and Ben. And if you have a question that you would like Mark to ask on a future show, you can go to the website, savingwithsilverman.com, find out how to submit that, and Mark will take the time to answer it on the show here. But you can get much more specific information about your situation by coming in and getting to know Mark and having him get to know you, because, he can give you all kinds of good generic advice here on the radio, but can't really get specific with your situation, and we're all different. So, it's a matter of coming in, having a conversation. He finds out more about you, you find out more about him, and there's no obligation either way. 520-333-7601 is your number to call or text. I'll give you that number again in just a moment in case you didn't write it down. And Mark, what do you have to offer those folks who reach out with a phone call?
Well, Ron, we've had some really great questions this week. And anybody that's listening, if you want to submit your question, just go to our website, which is savingwithsilverman.com. You click on the media tab and then put your question in there, and maybe you'll get to hear it on the air. But now's my chance to ask you a question, and can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients, they become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'm going to repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and risk and diversification and insurance and estate planning and healthcare? Are you having those annual reviews? But hopefully it's more frequently than that. Is there detailed follow-up? Is there accountability? If you are, if all of that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be surprised at what you'll learn, and this won't cost you anything. Give us a call or send us a text to 520-333-7601, 520-333-7601. That's 520-333-7601. Or check us out online at savingwithsilverman.com. That's savingwithsilverman.com. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. Send a text in that direction, or you can call 520-333-7601. The number to call to get in touch with Mark Silverman at Silverman & Associates, 520-333-7601. I hope you've written that down or put it in your phone, whatever you need to make sure you can remember it. 520-333-7601. Ron Stutz here along with Mark Silverman. And Mark, I got to say, you dispensed a lot of information out there today, and certainly enjoyed hanging out with you for a while.
Ron, it's been another great show. I want to thank everybody for taking the time to listen, and please let us know if we can help, and be safe out there.
Join us again next week for the next edition of Saving with Silverman.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.